Hey everyone, and welcome. We're going to do something a little different today. We're going to pull back the curtain and show you a real-time market investigation as it unfolded. It all kicked off on a pretty nerve-wracking Tuesday, and by following the brilliant minds at PhilStockWorld.com, you'll see exactly how they pieced together a very complex market puzzle. This is a fantastic example of what they do over there every single day.
So this was the question of the hour, right? The markets are sliding, and all the usual places you'd expect to see buyers show up, well, they were ghost towns. So the big question was, where is the floor? We're going to retrace their steps and see how they figured it all out. All right, let's get into it. To really get why Tuesday, November 18th, had everyone so on edge, you have to start with the charts. There was a major technical breakdown happening that was, frankly, pretty alarming.
And here it is, for the first time in over half a year. All three of the big indexes, the S&P, the Nasdaq, the Dow, they all closed below their 50-day moving average. Now that line isn't just some random squiggly on a chart. Think of it like a safety net. It's been the reliable buy the dip spot all year long. And suddenly, snap, the net broke. That one event officially flipped the market's whole posture into negative territory.
As if the charts weren't bad enough, a massive Cloudflare outage took out like a third of the internet that day. It wasn't just about your favorite website being down, it was a stark reminder of how fragile our entire digital world is, and that just poured more fuel on the fire of uncertainty.
But here's where the real mystery begins. The most interesting clue wasn't what was happening, but what wasn't happening. In a normal sell-off, money flows in predictable ways. This time, it was different. And following that money trail, well, that's what led to the first huge breakthrough.
And this is the genius question from Phil Davis, the founder of PhilStockWorld. It totally stumped the usual way of thinking. See, when people sell stocks, they almost always run to the safety of the US dollar, which makes the dollar's value go up. But the dollar was just flat. So if they weren't buying dollars or gold or bonds, what on earth were they doing with all that cash?
Yeah, this was a real head-scratcher. To figure it out, the community at PhilStockWorld turned to their secret weapons, some of the world's most advanced AI and AGI researchers, which they've playfully named Bodie McBoatface and Zephyr. And what these AIs found was absolutely hiding in plain sight.
And boom, there's your answer. Their AGI researcher, Bodie, uncovered a monster wave of cash flowing into money market funds. We're talking 118 times billion dollars in a single week. Just let that sink in.
To really understand the scale here, look at this. That 1 week pushed the grand total of cash sitting on the sidelines to over $7.5 trillion. That is an unprecedented wall of money just sitting there, waiting. So here's the key takeaway, the big insight. This wasn't a panic. It wasn't fearful selling. This was a calm, calculated, deliberate move to the sidelines. It was caution. Investors were consciously deciding, you know what? I'm going to park my money, earn a nice, safe return, and just wait. But wait for what? What were they so cautious about?
And that question leads us directly to the bedrock of this entire market rally, the one thing propping it all up, artificial intelligence.
This brings us to a core thesis from Phil Davis, which he calls the trillion monkey problem. It's a fantastic analogy. The idea is that the whole AI industry is hitting a wall of diminishing returns. We're throwing exponentially more computer power, more monkeys at typewriters, at the problem just to get slightly better AI models. A trillion monkeys aren't ever going to write Shakespeare, right? They're just going to hallucinate something that kind of sounds like it.
And look, this isn't just some abstract theory. It is having very real consequences. Just look at these layoff numbers. Companies are shedding tens of thousands of jobs. And why? It looks an awful lot like they're doing it to pay the massive bill for AI. The whole spending spree might just be funded by hollowing out their own workforce.
Okay, so this brings us to the climax, the main event. All of this market tension, all this caution, it all came to a head and focused on one single moment. The upcoming earnings report from the undisputed king of AI, Nvidia. I mean, it really felt like the entire market was holding its breath.
Initially, the community's AGI, Bodie, laid out a really sharp bearish prediction. The data was pointing to one thing. Rising memory costs were going to squeeze Nvidia's profits. So even if they beat on revenue, the stock was going to tank. A perfectly logical data-first analysis.
But then, Phil Davis, whose insights you can find everywhere from Forbes to Seeking Alpha, posed one simple question. And this question just completely changed the entire conversation.
It's a perfect example of how that spark of human intuition can reframe everything an AI sees. And that was the aha moment. The AI literally responded, "Fell, you just caught my biggest mistake." I mean, how cool is that? This is what makes that community so special. It's not just man versus machine. It's man and machine working together. The new insight was profound. Nvidia wasn't the victim of the memory shortage. With its monopoly power, it was the cause, and it was profiting from it.
So this incredible back and forth didn't just lead to a better guess. It led to this really sophisticated two-part thesis that separates what's about to happen from a massive risk that's looming just over the horizon. Okay, so part one, the short-term pop. The conclusion was, yeah, the stock is probably going up. Why? Because Nvidia has a monopoly. Demand seems endless right now, and, this is key, they get to book the revenue the second a chip leaves the factory. So all signs pointed to a fantastic earnings report and a nice rally.
But, and this is a huge but, here's the critical long-term warning. They called it the stranded asset problem. Customers are buying billions of dollars of these chips for data centers that don't even exist yet. They're just stockpiling them. This creates this massive lag, and it sets up a potential cliff in 2026 when all those customers suddenly say, "Whoa, we have enough," and just stop ordering.
Look, this entire journey, from one simple question about market support all the way to a sophisticated long-term thesis on the biggest stock in the world, this is a perfect example of the kind of incredible, in-depth analysis that goes on every single day at PhilStockWorld.com. It's why it's considered a premier site for traders who are serious about learning the markets.
And that's where we'll leave it. Thanks to this incredible deep dive, we have a really clear roadmap for Nvidia's earnings. But the real question, the one that truly matters for your money long-term, is the one this investigation uncovered. Is the market even remotely prepared for 2026? Thanks so much for joining this explainer,